Canadian giant Brookfield wins the battle for Origin Energy after the local group's board accepted an $18.7 billion bid. Stumbling retail sales show that interest rates are biting, and lithium stocks surge after a US company offers a mega premium for a local company. It's Wednesday, the 29th of March, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Last 24 hours have been crazy. In terms of corporate news in Australia, M&A activity, it's great. It's why I like being a journalist.
Yeah, there are some big stories to get into today. And just a very quick mention, Sean, of your interview that you have coming up after the show. You're speaking with Richard Kirkman, the CEO of Veolia, Australia and New Zealand.
It's kind of like the biggest unknown company in Australia. That's not quite how Richard puts it, but it's something along those lines. Veolia are involved in all sorts of things from rubbish collection through to clean water. Massive company, tens of thousands of employees. And we talked to Richard about what they're doing and their vision, how important having a purpose is and what they're up to here in Australia and New Zealand.
Yeah, it's a good interview. It's coming up a little bit later on. But as you said, Sean, there are some huge stories around today. And this is the big one this morning. Canadian giant Brookfield has promised to invest billions of dollars to accelerate the decarbonisation of Origin Energy after winning board approval for its bid for the Australian group.
Subject to regulatory approval, such as the Foreign Investment Review Board and the Australian Competition and Consumer Commission, Origin Energy will be sold for $18.7 billion. Chief Executive Frank Calabria said it was a great outcome for shareholders, customers, employees and partners. Under the deal, Brookfield, which is partnered by Singapore's Temasek and GIC, will take Origin's energy markets business, comprising mostly power generation and electricity and gas retailing. US-based EIG will buy Origin's stake in the Australia Pacific LNG venture in Queensland. That's the one that supplies gas to export and domestic customers. That part of the deal was worth $4.5 billion.
It is a big deal, certainly the biggest so far this year. Sean, how will Brookfield, I mentioned this before, how will Brookfield actually spend money to decarbonise Origin?
Oh, Michael, details.
I'm always after the details, Sean, please.
Well, actually, I shouldn't be too harsh on Brookfield here. Yesterday, it said it will work with Indian giant Reliance Industries on renewables in connection with the transaction. Now, Reliance previously has said it's looking at green hydrogen opportunities in Australia. Also, Brookfield plans to construct about 10 or 11 gigawatts of wind generation plus 4 gigawatts of batteries to replace coal plants Origin currently relies on. So it's pushing wind rather than solar. Brookfield also said that the closure of Origin's Eraring power plant in August 2025 will be carried out with the highest regard for network reliability and security.
It's been quite a tale, hasn't it, Sean? I'd almost go so far. I don't know quite where the threshold is, but I'd say it crosses beyond tale into saga. Wouldn't you agree? Because Brookfield initially went into partnership, didn't it, with Mike Cannon-Brookes' Grok Ventures to buy AGL Energy.
They did, and that failed, and Brookfield quickly swapped horses, chasing down Origin. Even after government intervention in the gas market late last year, Brookfield made it clear it believed in the opportunity in Australia. And recently, it actually lowered its bid for Origin from $9 to $8.90. Now, everyone thought, given the government intervention, it would drop the bid by a lot more, but it didn't. The final price is about $8.91. Now, I say about because it actually depends on exactly what the Aussie dollar exchange rate is. On Monday night, ahead of the acceptance announcement, Origin share price closed at $8.17. It was $5.81 on November 9, the day before the bid. Yesterday, it closed flat at that $8.17. So that suggests investors aren't 100% convinced it will pass competition muster. Still, quite the jump from $5.81 to $8.17. That's about 40%.
Yeah. So how did local markets respond?
Well, let's spare a thought for AGL shareholders first. They're the ones that rejected the bid and kind of lost the opportunity. While Origin share price has jumped more than 40% since last November, AGL's is up 1%. Not so good. More broadly, yesterday, the S&P ASX 200 finished the day 1% higher to 7,034 points. The energy and material sectors did best, while healthcare and utilities didn't fare so well. Lithium stocks were on fire, and that's not an exaggeration. Well, maybe it is. Not literal, but still, they're on fire. That's after a massive offer for Liontown Resources. I'll talk about that shortly. All the lithium companies did well as a result. Core Lithium and Alchem were up 15%. Pilbara Minerals was up 12%. Banks did well yesterday with the four majors, plus Macquarie jumping 1% or more. Woodside and Santos were big outperformers, while the defensive stocks, the ones that have done pretty well recently, Telstra, Woolies, Coles, CSL and Transurban, well, they all underperformed yesterday.
And what about international markets?
Michael, Brent crude prices are higher, so too gold prices and coal prices, while the Aussie dollar also appreciated against the US dollar. It's trading around 67 US cents. Now, why is that the case? There's just a sense of calm in markets after the massive gyrations of recent weeks. Certainly the banking crisis isn't over yet, but actions by regulators have been welcomed by investors, hence they're more willing to take on a little bit of risk.
Sean, I'm going to have to give you a yellow card for your use of the term gyrations.
I knew you'd do that. Gyration is actually a regularly used term in financial markets.
I don't know. Okay.
When else would you use it outside you dancing on a Saturday night? When else would you use gyration?
See, the problem is just when you say it, it just sounds a little bit kind of, not sinister, but...
Yes.
It has kind of these slightly creepy kind of...
I reckon 2 of the 5 daily podcasts, so 2 out of every 5 every week, you talk to me about sort of creepiness. There's a theme running here. Now, those that know me know I'm not creepy. Well, I mean, a little bit, but not totally.
It's that little chuckle that you do. It's that little there it is. And it also goes back to we've discussed on a previous podcast about how you used to
oh God.
loiter in the fruit and veg section of Woolworths.
Well, I don't think I loitered.
Yes, you loitered.
I just took time picking up the avocado, making sure I got the best one.
Yeah, and there's just, look, we're not going to go back into it today, but it just suffice to say, I think that's where this all started. And now I can't hear you say the word gyrations without going, ugh.
You know, you've just ruined that word for many, many people listening.
Excellent. In that case, I am upgrading you from a yellow card to a red card, and gyrations is hereby banned.
Okay.
Perfect. We'll be back in a moment with the rest of the day's business news. Sean, retail sales in Australia jumped slightly last month, suggesting that the consumer spending surge is now well and truly over.
In fact, including yesterday's Bureau of Statistics data, it suggests consumers really ran out of puff late last year, and that's continued into 2023. Retail sales jumped sharply in November, then they fell back in December, then they jumped again in January, and last month they rose by 0.2%. Spending in food-related industries, cafes, restaurants, takeaway services did well, as did department stores in clothing and footwear. Now, if you look at the 3-month average, the trend is your friend, Michael. That's one of the great economic sayings. Your trend is your friend. So if you look at the 3-month average, retail spending is clearly on a downward trend. In fact, it's down 1.5% over the 3 months to February, which is one of the worst outcomes in the history of the series, according to AMP. What's all that mean for interest rates? Well, they're definitely starting to bite. Financial markets don't think there will be a rate rise next week. Market economists still unsure of that. They think that the financial markets are a touch optimistic, but still these retail trade figures show that rates are biting.
Sean, Liontown Resources share price jumped 68% yesterday after the lithium group received a bid from US-based Albemarle, the world's biggest lithium company, at least in terms of market capitalization. 68%, that's huge.
It's huge. The $2.50 a share offer is a 67% premium to Liontown's close on Monday, and it values the group at over $5.5 billion. Now, that's bigger than a bunch of household names like AGL Energy, Lendlease, Harvey Norman, Domino's, JB Hi-Fi, etc. This is a big takeover offer. Liontown, which has contracts with Tesla and Ford Motor, announced the offer yesterday after 5 months of talks and then rejected it. Now, Albemarle responded by saying it should have gone to shareholders. Analysts say there could well be other suitors out there, and just the fact that they announced the takeover offer suggests that Liontown Resources might be fishing around for other buyers. Hence, we saw all those lithium stocks do so well yesterday. Just as an aside on this, there are plenty of short sellers on lithium stocks feeling pain today. ASIC data shows that Liontown had 196 million shares shorted ahead of the announcement yesterday. That's a paper loss of about $174 million.
So how does that work, Sean?
Well, best way to describe it is people are taking a punt that the share price is going to fall. And so they have taken an option to repurchase shares at a lower price. And given the price has gone up, they've done their dough.
Gotcha. All right. That is a big loss then. Now, another takeover offer made yesterday, Sean, you did say it was a big 24 hours and you were right. This offer was for United Malt by the beautifully named Malteries Soufflé.
Isn't that a cracking name?
That is great, isn't it? It's poetic. I mean, I butchered it, I'm sure, but it's quite glorious.
Yes. Where's it from? And one guess where Malteries Soufflé is from.
I'm going to go with French. It sounds French.
Well done. It's entered a deal to buy United Malt. That's the 3-year-old offspring of Grain Corp. Of course, it produces malt for distilleries and brewers. The $5 a share offer is a 45% premium to United Malt's closing share price on Friday, valuing the company at about $1.5 billion. Malteries Soufflé, it's hard to say, isn't it, without putting some sort of accent on it? Malteries Soufflé.
That's more like it.
That's it, yeah. So Malteries Soufflé made its first bid back in December at $4.15 a share. This is actually the fourth offer it's made, and the board of United has finally said yes. United share price jumped 31% yesterday to $4.51. Obviously, that's below the $5 mark. It suggests investors aren't fully convinced it will go ahead, particularly given it needs to get regulatory approval.
Sean, this is an interesting one. All of Australia's banks have passed APRA's theoretical stress test, which is definitely good news given the current nervousness around the global banking sector.
The regulator, the Australian Prudential Regulation Authority, conducts stress tests to see what would happen to a bank under different scenarios. It might be a big jump in interest rates or maybe a recession. If the Reserve Bank lifts rates by 400 basis points, local banks would still survive, according to the regulator. It's unlikely to happen, but good to know the banks are strong. The lenders can also survive major data breaches, according to APRA, and will also be okay even if the unemployment jumps to 11%.
Goodness. All right, that is quite the stress test, isn't it?
It is.
And just staying in the finance sector, Sean, the competition regulator has called on participants in the sector to up their efforts to protect Australians from scams.
Australian Competition and Consumer Commission Chair Gina Cass-Gottlieb said she wants initiatives across critical sectors such as banking, telcos and digital platforms to work together to block scams and scam transactions. She also yesterday commented on the ACCC's inquiry into banks on deposits, saying the regulator was particularly interested in understanding the impediments to consumer switching between deposit products or suppliers. Now, Cass-Gottlieb was speaking at the Financial Review Banking Forum yesterday, as was Westpac boss Peter King. He said scams and unlicensed financial advice was, as he put it, driving him nuts. There you go. The other thing he talked about yesterday was unlicensed financial advice. He said that was driving him nuts too, as it turns out. He said investors are doing their own financial planning through Google, Facebook and Twitter, and they're just getting fake investment perspectives. As he put it, there's life-changing losses for individuals. Couldn't agree more. Go to a financial advisor, make sure it's a registered financial advisor, rather than Googling it and working out where you should put your money. King also commented on bank mergers, saying there'll be fewer, bigger banks over the next decade because it's become a scale business. Think about the cost of investing in digital technology, cyber protection, regulation, just the cost of running a business has grown and participants need scale. King also said that the mortgage market is ferociously competitive at the moment.
All right. Now, the government's safeguard mechanism whereby the country's 215 biggest polluters will have to reduce emissions by 4.9% each year until 2030 remains really the top political story, with plenty of supporters and plenty of detractors, Sean.
Yes. Now, Climate Change and Energy Minister Chris Bowen was out selling it yesterday. He said the legislation creates certainty for business and has been welcomed by the Climate Council and the Business Council. Not always on the same sides of the fence, nor are the Australian Conservation Foundation and the Australian Industry Group, who have also welcomed the legislation. He said fossil fuel projects in the pipeline could go ahead if they met the emissions requirements. No doubt, though, a bunch of them won't. There's still plenty of opposition from business, particularly those in that sector, the energy sector, and the coalition. They're certainly not supportive of it.
And negotiations on the federal government's key housing proposal are set to drag into budget week, Sean, as the Greens and crossbenchers push for extra measures to address the housing crisis.
The government says it will raise a $10 billion housing fund to finance the construction of 30,000 affordable homes for the most vulnerable. They've told us that a couple of months ago. But the Greens are calling for major amendments for their support, including more rental assistance and the building of 1 million new homes. 1 million new homes. Independent Senator David Pocock, who joined the Greens and unions outside Parliament for a rally yesterday, is also holding out for a more ambitious government plan.
And finally, just a quick one out of New South Wales, Sean, where Chris Minns has been sworn in as the state's 47th Premier.
Yes, as has an interim cabinet, just 5 members. They are also sworn in. Ironically, it's now not clear whether Labor can form a majority government in New South Wales, with postal votes now being counted. Now, one seat moved back into the doubtful category, took the ALP in New South Wales from 47 to 46, so it isn't necessarily a majority government. Now, Minns has done a deal with 3 crossbenchers, which will allow him to govern.
All right, moving to international news now, and the World Bank wants governments around the world to adopt policies that could avoid a decade of lost global growth.
The bank says the engines of growth that have fueled economies over the past 3 decades are losing steam. Productivity growth is slowing, investment growth is slowing, populations are ageing. Also, trade is losing steam. The World Bank expects that global trade will fall from 2% over the past decade to 2.2% in the next decade, a third lower than the early 2000s.
Now, this next one, Sean, is either fake news at its best or its worst. I don't really know. Twitter has been flooded with images depicting the arrest of Donald Trump and mugshots taken by the New York police, but none of it has actually happened. Well, I suppose not yet, anyway.
Have you seen them?
I have, and they are so convincing.
They're incredible, and they were generated by artificial intelligence. They show the former president fighting with and fleeing officers. There was another one that shows his wife Melania and his son Donald Trump Jr. shouting in protest at his supposed arrest. Now, they come a week after Trump posted on social media that he expected to be arrested last week over hush money paid to the former porn star Stormy Daniels before the 2016 presidential election. It didn't happen, and an indictment is yet to be issued. Now, Trump hasn't mentioned it since 10 days ago or so when he talked about being arrested, but he has raised millions of dollars for his 2024 presidential campaign from supporters angered by his supposed imminent detention.
And finally, Sean, the annual Watches and Wonders trade show in Geneva is on at the moment, and Rolex is winning all the plaudits.
You'd be across this one, wouldn't you?
Oh, I don't mind watches, but I mean, I actually really like them. But the problem is, they're just so expensive.
I'm with you. I love watches. I have a Tissot watch, which I must say I'm so proud of. It was given to me and it's kind of my favourite all-time watch. But they're just so expensive. And so all sorts of people turn up at these shows. In the past few days, David Beckham has been at Watches and Wonders. So too has Julia Roberts. That's according to Bloomberg. Most of the buzz has come from new watches by Rolex. Now, Rolex is really the powerhouse brand in watches at the moment. It has topped the industry in terms of revenue for years. Buyers went mad last year for a GMT Master 2 for left-handed wearers. Who would have thought? This year, it's all about the Oyster Perpetual Cosmograph Daytona, the Perpetual 1908, and the GMT Master 2 in 18-karat yellow gold. They're all for you, Michael.
They all sound both fancy and expensive.
And you're right. They are both fancy and expensive.
All right, up next is the Fear and Greed Daily interview, and today you're speaking with Richard Kirkman, CEO of Veolia Australia and New Zealand.
Yes, just about Veolia's operations in Australia and New Zealand. Massive, massive company, clean water, very focused on the environment, garbage disposal, all sorts of things like that. Fascinating interview with Richard.
Yeah, it's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Sean, yesterday we spoke about our MEA, our MIA, our most enthusiastic advocate.
Mm.
And I actually have a bit of a mea culpa about our Mia.
Oh.
And that is, we were speaking about Bobby, who was our most enthusiastic advocate of the podcast. On a number of occasions, I said, Bobby, he has said this and he has said that. I should have been saying she has said this and she has said that. And so, Bobby, I am sorry. I made a terrible assumption there. And Sean, you would know, it's not like me to jump to conclusions or make inaccurate assumptions or anything. I certainly did on this occasion, and I am sorry, Bobby.
Apologies, Bobby.
And so that means for 2 days in a row now, Bobby, you are our MEA, our most enthusiastic advocate. And so thank you for your ongoing support. And thank you, Sean.
Thank you, Michael.
It's Wednesday, the 29th of March, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, Twitter, and Facebook. Don't forget to check out the new episode of How Do They Afford That as well, which is out today. It is all about avoiding the risks and the traps, the things you need to be aware of when you come to refinancing a home loan. I'm Michael Thompson, and that was Fear and Greed. Have a great day.